Hi everybody, and welcome to this special video this is on technical analysis, and we're specifically going to be looking at triangles today. Specifically three triangles. We're going to look at the descending triangle, the ascending triangle and the symmetrical triangle, and I'm going to show you how these are set up and how to spot them and how you can actually trade them as well. You probably noticed in the premium group I've spoke a lot about triangle. It's coming out of a descending triangle, it's going to break out of an ascending triangle, or it's going to break out of a symmetrical triangle, break down below. So this is a way to spot them as well, and I want to show you this because it's going to make you a better trader, and it's going to help you set your stop losses as well. You can, with triangles, you can set really tight stop losses or really specific stop losses as well with triangles, so you don't lose as much money or you don't stay in a trade longer than you actually have to. So what I'm going to do is I'm going to jump over just now and we'll go over to the XRP chart. This is a good chart just now because this has got a brilliant setup for a symmetrical triangle. We'll get rid of this just now and we'll show you this just now. So this is XRP on the 4-hour chart. Okay, so I'm going to make this easier. Now with a symmetrical triangle, usually what happens, we'll look at it on the hourly just now, and we'll put it on auto just now. You'll be able to spot a symmetrical triangle forming with, you're going to get lower highs for them, and what you're going to do is get higher lows. So that's usually when that happens quite a lot and there's a pattern forming there. That's when you start to think, okay, there's a symmetrical triangle forming here. This could be good for a breakout or a breakdown, and you can set your stop losses accordingly. Now we can see here the general trend for XRP is down. If we kind of put a line round about the middle here, the general trend is actually down at the moment, but we can start to see an uptrend here. And this is where we're getting this symmetrical triangle because of this uptrend very recently. So I'm going to take off auto and I'm going to take this support line off. And then we're going to draw a line. Now the way to draw the lines, a lot of people use the wicks, a lot of people just use the closing price. I tend to use the wicks of these when I'm doing the kind of triangles, but I've used the closing price as well. You can use a closing price as well, but we're going to use the wicks. The wicks are here, just the ones that extend out or down from the actual closing price of the candle. You can see a closing price of a candle with the solid line. That's the end of the solid line. That's when you know that's the closing price, and the wick was the highest price when it goes up the way. Okay, so I'm going to use it from here, from this wick, and we can go down to another wick, and we'll just extend it all the way down just now, and we can change that later on. So this is the downward slope of the symmetrical triangle. This is the first one we're looking at just now, the symmetrical triangle, and I'm going to use this here. This is extending to round about the 14th of March. Okay, so this is the wick of the closing price as well at the bottom of the wick, and we'll just extend this back up the way so it just meets it at the apex of this. So we can see this is called the apex, and this is where the price either breaks down or breaks up, and a lot of traders use this, and this is why it's so important. So we've got it on the 13th of March around about 2 o'clock, possibly extend out more than that. This is using the 1-hour chart, so we get a precise one. But if we go down to the 4-hour chart, it doesn't matter what chart you use or what time frame you use, it should still stay true to the actual symmetrical triangle. You can see it still stays true on the 4-hour. If we look at it on the daily, it'll look a lot stranger, but it'll still stay true to that. If we look on auto, it'll still stay true to that. So that's over the kind of period of 7 days, and it's staying true. You can see here it's not breaking resistance at all. So it's staying true to the symmetrical triangle. It's not breaking down below this line, support line as well. So you could use it on either. We're going to look at the 1-hour just so you can see it much more clearly. And we'll take this off auto so you can see it right in the middle there. So this is going, the apex is finishing round about the 13th of March. A lot of people have got it round about the 14th of March. And the reason why this is important is because once this kind of reaches and they kind of come closer and closer together, it has to break either way. It's going to break either way, and that's going to tell us the direction. Now, usually when it breaks, when a trader sees this kind of setup, an experienced trader, they're either going to trade it kind of going short, or they're going to trade it going long. Now, usually it's with the trend. Now, we said at the very beginning, the trend here overall for XRP, and we'll put this back on auto, the trend here is going down the way. So you would expect this to break down because the trend is down. It usually goes with the trend. However, we did say as well that because a symmetrical triangle is starting to move back up again, so this could be the start of a swing and a turnaround for XRP. A lot of people are expecting XRP to break up the way. So if we go back to the hourly, we can see this kind of trend upwards with this upward line, this kind of sloping upward line, and this is the support line here. So this is why they're thinking it could break out and go up the way. Now, generally what tends to happen is we can measure from the tip here of the sloping line to the upslope or the upward swing. We can measure that, and we'll just go smaller. So if this goes up to here, up to the apex, around about the 13th of March with tomorrow or Thursday, and you think, oh, this might break down, or you're hoping it breaks up, but you want to place your stop loss round about 7,000, say 900, way down here. This is where the kind of previous support's been for this line here. So I would put a stop loss in round about here. You can see these wicks here. That would be kind of like your support level for here. So I would put a stop loss in there. If it's going to break down and it goes below that, you're going to get stopped out. So that represents, it's only a small percentage of your investment. So it's less than 1%. So 1% stop loss, if you're putting $1,000 in, then most you're going to lose there is $10 for 1% stop loss. So it's at 7,986 just now. Up here, and we put a stop loss, it would be 8,000 there just now, and you're only risking say 100 Satoshi. If you want it to break up, but you want to put a stop loss in, you've got 100 Satoshi, or you could leave it kind of down here to 7796. So that would be your symmetrical triangle. So conversely, the other way, if you think it's going to break up the way, this could be the start of a bull run for XRP if it breaks out up here. So initially we're looking for it to go to 8,500 and then kind of keep on going from there. So we want it to break up to there, and if it kind of follows that pattern, it'll probably come back down and keep on going up, and it could be the reversal of XRP, because we can see here overall trend is down, and we want the reversal of that as well. We want this kind of trend to be up like this, and want to see that line going back up the way. So this is why a lot of people are expecting this to break out, because it's going to be the reversal of a trend, and hopefully it's going to reverse that trend and start going up the way from here, and see a breakout from here as well. It's certainly what I'm expecting for XRP, but that's just an example on XRP and how to do your symmetrical and where to put your stop losses as well. So if you're going to do this, you put your stop loss, you could put your stop loss at 7,800, or even tighter at 1% and do 7,900 or something, and you're only getting a 1% loss. So if you put $10,000 in, 1% at $100, not that bad at all, but the upside could be huge as well. So that's how to do a symmetrical triangle. I think that was a perfect illustration of that. So we're going to go to an ascending triangle here. So an ascending triangle is where you've got support on the sloping upward line, and you've got resistance on a kind of a top level of your triangle as well. And I'll just show you exactly what this looks like. So we can see here quite clearly there's kind of support around here. If we kind of put a resistance line in here, round about here, this is clearly a resistance line for LTC in the past. Kind of hit here, went down, hit there, went down, 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 and then it eventually broke through. But before then, it wasn't able to break through it, so we'd have an ascending triangle. So the triangle would go here, and the trend line would clearly start from round about here and go there, and we'll make this, so we'll take this one out. And I'll put the ascending triangle. This is the resistance line of the triangle. And we can see here, this is acting as support, the slope upwards. So what we're doing, we're getting higher lows again, but we're not really getting higher highs because this resistance line is kind of keeps on getting hit. But you can see here what happened is we had a breakdown below this line, this kind of support line. So once you've got a breakdown below that line, it kind of stays out of there, then you know that's not a good sign. That's a sign to actually get out of it until it forms another kind of triangle, or until it forms a kind of a reversal pattern. So what we'd do here is we'd put our stop losses and move our stop losses up as this kind of moved up in price. So we can see here from the 14th of February, it kept on going up. We're around about 1.1 million Satoshi. It went up to 1.2 million nearly, kind of went up there to 1.23 million, and then it broke down below. Came down below and went to 1.1 million again. So what we'd do, we'd put a stop loss as it's moving up as well. So initially we put a stop loss around about here. We don't want it to go any further below then. And then we keep moving that stop loss up to here, to here. And if we had a stop loss around about here, this level, in fact we'll get rid of this and put a line in. If we were moving it up, this would be your line for your stop loss. And it kind of went up to here at 1.26 million and you got at 1.2 million. So you wouldn't have lost that much. You could have lost, and we'll just see it percentage wise. So say 4.5%, $1,000. If you put $1,000 in, you'd have lost $45. But if you put $1,000 in at this point, at the kind of bottom point, you'd have still been up on that. So this is why you need to put a trailing stop loss in, and this is why it would be good for Binance to have a trailing stop loss system, but they don't. However, you can use something like 3 commas for trailing stop losses on Binance. I don't like using it. I don't like to recommend it because I don't like giving my API keys away. But you can do that, and it's relatively safe as well. I've looked into it and it is relatively safe to use 3 commas. So we've seen the kind of breakout from there. What happened with the breakout? So it kind of broke down here and kind of went down and then started going back up again. So now we want to look at the descending triangle. So we'll pick another one and we'll just do it at random, and we'll pick B and B. No, we can still see it here. So I'm going to take these supports away. Okay, so the descending triangle is flipped. So you're going to have a support base and you're going to have a slope going down the way. And that's whereby you're going to get lower highs, but it's not going to go past. So that's acting as resistance, the kind of slope downwards, and you've got support at a base level. And this is really good as well because you know exactly where to put your stop loss as well. Okay, so what we're going to do, we'll go to a trend line. I'm going to use this line here, and we're going to use this clear support tier. If you kind of look at this, there's clear support tier as well. This is on the 4 hourly as well. You can use any one. You can use the hourly, the 4 hourly, or the daily, or even the weekly as well. Right. So this is a descending triangle. We've got the top here, and we've got kind of resistance all the way down here. So it tries to get up there, it doesn't come in. And we'll just put this off auto, and we'll kind of show you this clearer. So it goes up to this line, comes back down, goes up to this line, and it's coming back down, come back down. Then it hits the support again. It's hit the support 1, 2, 3, 4, nearly 5 times in a row, and bounced off it each time. And then eventually it kind of comes back up, and it breaks up out of this triangle and goes all the way back up again. But there's another thing here as well that gives you confirmation, and this is a crossover of the 7 EMA and the 50 EMA. So if this happens at the same time as a kind of breakout, that's a really, really bullish sign. We can see exactly what happened there as well. So it kind of went up another percentage-wise. It went up another 53% from here, from the breakout. So this is the 4 hour, and this is when it already kind of gone up to 260,000, and that was a brilliant breakout, and it had an additional confirmation of the breakout of the crossover of the 70 EMA going over the 50 EMA. So I hope that explains this a little bit. But what you would have done here as well is you'd have had a stop loss. You know the support is round about here at 244. It just means you can set a really, really tight stop loss. So we can set the stop loss, say, round about 235,000. Now, if you got in here, round about the support line, what would that be for a stop loss percentage-wise? Percentage-wise, you're talking 4%. So if you got in with $1,000, you're only risking $40 to lose. But look at the upside. If you got in with $1,000 here, well, we've seen it went up 50, well, not 50% from there. So we'll see exactly how much it went up at the peak. 62%. So for $1,000 in, you get 1,620 back. However, if it broke down the way and it hit your stop loss, you put $1,000 in and you've still got $940 or $960 if you're losing $40. So the risk to reward ratio is really good. And this is why it's important to get this base for the triangle, because you know exactly where to put your stop loss. You could have made that even tighter as well and just risked losing 2%. So this is why triangles are so important. I've went very, very quickly about the ascending triangles, the descending triangles, and the symmetrical triangles. And I've done that really, really quickly. But that gives you a gist of how the triangles work. And now that you know this, you're going to see triangles all over the place. Because once you start seeing the triangles, you'll just become obsessed with them. And it's a really, really good way to use TA. And it's a really good kind of extension of your TA knowledge as well. So I've kind of said in the past that all you need is a crossover, and I still believe that, but the triangles give you where to put your stop loss. It's brilliant for stop losses. It's brilliant for, because I love the symmetrical triangles where you know there's going to be a breakout point at one or the other, and you can put your stop loss accordingly, or set your stop loss accordingly, and depending on what way you're going. If you're going short, you put your stop loss above. If you're going long, you put your stop loss below, but you can set it really, really tight so you don't lose as much money as well. And that's what it's all about. It's about preserving your money, obviously making it as well. So I hope that helps with the triangles. As I say, there's a very, very quick rundown of how triangles work and how you can trade with it. And let me know what you think. Okay, until next time, namaste. Take care. Bye now.